When Portillo's reported its first quarter out of the gate in November, they delivered 15% revenue growth, nearly 7% same-store sales growth. More importantly, unlike many other small restaurant chains that have come public lately, Portillo's is actually, are you ready, Ski Daddy? Profitable! Although those profits declined slightly in the last quarter because the company's investing in its growth. Long-term, management believes that they can grow from 69 locations to roughly 600 nationwide, which gives them a very long runway, but they're not expanding too rapidly. This is more like a slow-motion regional to national growth story rather than a fast-motion train wreck. Like so many that we've seen. Remember Boston Chicken? Of course, there are some negatives here. Portillo's has a private equity sponsor, Berkshire Partners, that still owns more than 60% of the company, even after the IPO. The overhang, when they could finally ring the register, could do a lot of damage. Plus, again, this stock is very out of step with the current moment. That's why even though Portillo's initially surged from $20 when it came public to $54 in mid-November, the stock's now sunk to $31 and change. This is a little bit like the Dutch Bros, guys. Remember? Glenn went up, then up, and up, and it's come back down, although the Dutch Bros is doing better than Portillo's in terms of stock price. In the end, as much as I like the fundamentals here, this one all comes down to price. Unfortunately, even after this decline, Portillo's is still pretty darn expensive on an earnings basis, selling for 55 times the 2023 earnings estimates. At least it's earnings, though, not sales. Although if you judge it using the enterprise multiples, that's the enterprise value to EBITDA ratio, then it's only slightly more expensive than Chipotle or Shake Shack and cheaper than Dutch Bros or Wingstop. Interesting, huh? Those are all faves of ours. My view, again, Portillo's is totally wrong for this moment, but I very much like the long-term story. So you've got my blessing to put on a small position here if you'll send me one of the sausages this weekend. If the stock keeps getting hit, here's what you do. You buy some, and you gradually buy more into weakness.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.